Hi everyone, welcome to this week's Russell 2000 and US equity markets commentary. You're speaking with McDonald. What we have here is a weekly chart for the Russell. And anybody who isn't yet convinced from watching my videos that you should be looking for these flat support and resistance levels, hopefully now, especially looking at this week, we've got these lines on the chart, one around 800 and one up here around 832, which have been on these charts for weeks. I drew them many weeks ago. And it's interesting that when we drew them before price first came up and tested the high, and before it then came back down and tested the low, these last 3 weeks have been highs and lows, opens and closes, as well as the highs have been fully contained by those levels. The few times prices dipped below 800, you can see here on the weekly chart, it's come back up to close above those levels. So they've been really contained and found support and resistance at those levels constantly there, and they are key levels. Why are they key levels? They're based on old support and resistance where prices tested that same level many times in the past. Now, price is really trying to make a decision. Traders are trying to make a decision. Does price sell off from here or does price go up? As long as we're now within that range, it's going to be very difficult to tell. So now we know what the range is. That was between 800 and it's between 832. So let's draw this in on the daily chart. We've got 800 down around here. We want to see price break out of that. And in fact, we can really, based on the daily and seeing the actual lows, we can put the range down towards this lower side at 786. And then at the top, we've got it up around about 830. If we can break up through 830 or down through 786, we'll be starting to see some indication as to where price is going next. I am still slanting to the downside for the reason I have for many weeks in terms of the monthly charts across all the index markets are looking well overbought. Last week I said I was slightly bullish because last week price had just put in a higher low and a higher high. So we had a higher low at this point than the previous low, and we had a higher high ahead than the previous high. And at that stage we weren't ranging yet because we'd still continued within an uptrend there. But now what's happened is we've very much got into a range. So now it's much harder to say exactly what's likely to happen. But for range traders, you might want to trade within that range and look, if we get another run up towards 832, that'd be an indication for a range trader of a sell on the way back down towards 800 and maybe even 790. But for a trend trader, this would be more a case now of looking to see if it breaks up through 830 or looking to see if it breaks down, and if it breaks down then looking for the move back down to probably towards around anywhere from kind of 750 to 700 is where I'd expect this to pull back to for a decent pullback before continuing on in the uptrend. So for me personally, what do? I will look for range bound strategies within there, but I don't trade that much in a range bound market, to be honest. And if we just come out and look at this, this is a 2-hour chart here. It's much more erratic. Now, there is opportunities, as you can see here, the times when prices got up towards the top of the range. There is opportunities here if you're nimble, and maybe there will be if price gets up there again. That's certainly the kind of thing I will look for. But actually what I prefer to do, and I want to make today's video ever so slightly different, is what I prefer to do now is to intraday trade. And I want to show you one quick thing that I do on the Russell, which hopefully a lot of you are already doing, but which if you're not, you might want to consider. And that is, I look at the gap on the Russell. So this is now a 1-minute chart, and what I've done is I've set my trade station up to be a template so that I can't see the whole 22 hours of trading action, but what I can see is the close here, and I've got this set. The very last candle is 4 p.m. and then I've got the open here at 9:30. So I've filtered out all the other action. I've set up a template to do that, and I can therefore see just the cash traded hours, the regular traded hours, and I'm filtering everything else out. What often happens, like happened here last week, this was a very good example, is this gap that is created by our artificial gap on the chart closes. So here we've got a gap down and see the gap closes. So I had a nice long trade here last week for the gap down looking for it to close, and I got a winning trade. That's a good winning intraday trade. Let's just look back at a few. Here's the day before, and we had a gap down, and I got long in here for looking for the gap to close, and the gap didn't close. So not every single gap will close, but around about 74% of gaps close. So that one there didn't, and that was a losing trade. Let's just scroll back just through a couple. I just want to show you, even just over the last little while, how well this has been working. So there's one winner and one loser. Here's another example the day before where the gap did close. We had a little gap down, then we continued downwards before coming up and closing the gap. So there's 2 winners, 1 loser just last week. Let's scroll back to before that. Okay, the day before that we didn't have a gap. Let's keep on scrolling back. The day before that we had a little gap and it closed. So a little gap up and it came down and closed that gap. So even just last week we had 3 winners, 1 loser, and 1 day with no gap. If you want to go and test this yourself, you can set up a template on whichever charts you've got so that you can see that gap and just go scrolling back just like I am here and just prove it to yourself. Here's a day coming all the way back where we had a big gap up and the gap didn't close. So go back and have a little look and see prove to yourself how these gaps close, I can tell you the statistics over the last number of years that the gap does close anywhere from kind of 74 to 75% of the time. Right now we're sitting at about 74. And actually, out of all the index markets, the Russell has the highest gap close statistic. So that's statistically, looking back at all the gaps over the last 5 years, the Russell has the highest one. And this is the perfect kind of thing now to be looking at as an intraday strategy in a ranging market. That's what I do. I trade intraday when I'm not so certain of the overall direction. However, coming back and just wrapping up what I think of the Russell this week, it's coming and looking at the weekly, it is clearly within that range in the weekly too, however pulling back into the moving average buy zone, and therefore based on that showing signs of a possible bounce off. Whereas on the monthly chart it's coming up and hitting resistance and overextended and showing signs of a sell-off back down, and then coming and looking at the daily chart, we have no real view whatsoever because we don't have any trend, we just are very, very much stuck in a range. So we have a real conflicting signal across the daily, the weekly and the monthly, and for me to trade on a swing trade basis, on a position basis, I want to see agreement from the daily, weekly and monthly. And at the moment the daily says sideways, the weekly says sideways to slightly bullish, and the monthly says bearish. So in fact we've got conflict across them all. I would rather be intraday trading, and there's an example there of an intraday strategy which I will be employing and which I always employ in both ranging and trending markets, but right now I'll focus more on intraday trading, and I'll be watching this to see if price can break down out of that range or up out of that range, and I'll consider taking positions in that direction as and when it does. Happy trading all, have a wonderful week, and I'll speak to you next Monday.